Hello, ladies and gentlemen. It has been a crazy couple days here since Monday and since Tuesday of the stock market to start October. Um, so stay tuned for what's coming up in this video. If you haven't already, please go ahead and leave a like and subscribe to the channel so I can keep you guys updated on the news in the stock market. So let's go ahead and get started. Today, the Dow Jones dropped about 500 points. I mean, that's pretty big. That's big time. And yesterday, I believe it was down like 250, maybe 300 points. So in total, the Dow is down over 800 points in 2 days. So, and essentially, I'm just going to read the little blurb up here, the key points. So the Dow Jones Industrial Average fell for a second day on Wednesday, bringing its 2-day losses to start October to 838 points. The drop in the Dow came after reports showing slowing in September for both manufacturing and hiring. I believe that's the main reason. This third point, I don't think that's super um, wonderful. The two economic signs come as President Donald Trump faces a push for impeachment for Democrats. Whether that's the impeachment is affecting anything or not, probably not. It's probably not even going to happen if we're being real here. The S&P 500 fell below its 50-day moving average on Tuesday, a key technical indicator watched by analysts. The bottom line is people are just freaking out. Everyone's screaming, "Oh, recession, recession, this and that. Oh man, this is going to be terrible." It's really just a big panic, and I don't know if it's fully justified, if I'm being honest. So I'm not even going to really focus on it for this video. If you guys want me to focus on that for a future video, let me know in the comment section. But for this video, I just want to go back to what we talked about yesterday, and it's essentially the cost of commission for trades is done. It's gone. I mean, I didn't know that the one move from Charles Schwab would cause this just domino effect of every investing company to slash their commissions. But apparently, even TD Ameritrade cut their commissions yesterday as well, and E-Trade joined them today, and I believe Ameritrade joined them. So all of these massive companies are, their commissions are over. They're not going to be able to haul in that revenue. So let's just read a little bit about this. E-Trade Financial Corp cut trading commissions to zero, joining major rivals in the race to the bottom and setting the stage for mergers among discount brokerages. The end to commissions on U.S. listed stocks, ETFs, and option trades will go into effect October 7th. New York-based E-Trade said in its release Wednesday, which is all of them. I mean, Charles Schwab goes into effect that day. I believe TD Ameritrade. I haven't looked into Ameritrade. I guess that is Ameritrade. Never mind. TD Ameritrade will also, I assume, go into effect Monday, just so there isn't that lag between them. Its options contract will be cut to 65 cents. Again, that's matching what Charles Schwab did. E-Trade estimates a loss of approximately 300 million per year in revenue from the drop in commission. That's pretty big. That's pretty big for E-Trade. Let's go ahead and Google E-Trade's market cap. E-Trade market cap. So they're at 8.5 billion, which is not a measly number. That's a very good number. But they're not as big as Charles Schwab. I believe Charles Schwab was like 50, and TD Ameritrade's probably pretty high up there as well, 18, and Charles Schwab is, yeah, right around 50. So Charles Schwab is the biggest, but they also do other things. But E-Trade is definitely the smallest in terms of these three. So it says the move shows the intensifying competition to lure retail investors who gravitate towards the cheapest offerings. Blah 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 blah. Charles Schwab Corp and TD Ameritrade also slashed trading fees to zero on Tuesday. The Schwab announcement set the shares of all the brokerage stocks plummeting. But TD Ameritrade got smashed, and they're continuing to be smashed today. It's honestly crazy what happened to them because they dropped like 25% yesterday, and they're down like another 2 or 3% today. So let's go ahead and look. Charles Schwab, they're right on $36, which is probably a pretty good buy-in point. I believe that's close to their 52-week low. If I'm not mistaken, 52-week low, 35.8. And I do believe they pay a decent dividend yield of 1.8%. So I mean, it's not a super wonderful dividend stock, but I mean, it is a fairly good company that you guys may want to take a look at. TD Ameritrade, absolutely destroyed. Absolutely destroyed. They are down over the last. I wish that would change. Why is that not updating? Over the last week, or over the last couple days, rather, they are down, I believe, north of 28%. They got absolutely destroyed. Um, let's take a look. Their 52-week high was 57 bucks, and I don't think that was that long ago. No, they were up at 50, not even a month ago. Half a month ago, they were up at $50 a share. Now they're at 33. That is absolutely crazy. I don't know what the big reason for that is. Actually, I do want to look at Fidelity real quick. Open that new tab just to take a peek and see if they actually slashed their um, nothing's popping up. If they slashed their commissions, if they haven't already, I assume they will. But yeah, TD Ameritrade stock got slammed. So absolutely gorgeous buying point on TD Ameritrade if you were looking to invest in them. I believe, I can't remember, I do feel like I have them on my watch list on Robinhood, but I'm not entirely sure with that. Anyways, let's take a look at E-Trade. So, I mean, between the three of them, TD Ameritrade's probably the second biggest in terms of market cap, but they have the lowest stock price. TD Ameritrade also has a solid, that's a very attractive dividend on a stock like this. So, I mean, that's a very interesting play there. But that's not the focus of the video. Essentially, just the amazement of the fact that commissions are gone in like literally a day. They're gone. And I like I said, Fidelity's going to have to do this too if they haven't already, just to compete. Otherwise, people are going to go to Charles Schwab, TD Ameritrade, or E-Trade. And I do believe there was a portion in this article where it said TD Ameritrade may act to try and merge with E-Trade. Analysts have long pointed to TD Ameritrade as a prospective buyer of E-Trade, which is the smallest by market share of the top online brokers. So that could make them stand out a little bit more. I do believe the most diverse of these three is Charles Schwab, just because of the fact that they have 3.7 trillion of client assets, and they're also they have like a bank section and an investing section, all sorts of different things. Company, so Fidelity. I don't believe there's anything on Fidelity yet. The fee war has rattled the border asset management industry as well. Since the middle of the last year, firms including Fidelity have eliminated fees and commissions on a range of offerings. Okay, but it hasn't necessarily said on everyday investing. So the biggest thing that crossed my mind as I was reading this article was what's going to happen to Robinhood, because they're no longer that attractive in terms of they don't stick out that much. Their biggest draw factor was always the fact that they were free. They had free trading commissions. There was zero commissions on that. So I was just sitting here like, what's going to happen to them? Are they going to get out of business? They're probably not going to go out of business, but they're going to lose a lot of people. And that's sad to say because they've been dominating the free section of the industry for the longest time. And M1 Finance got into it. I don't think M1 Finance is as big or ever will be as big as Robinhood once was or is. But, and then as I'm scrolling through this article, this little thing popped up. I don't know whether that's just a comment to this. I believe that's just a comment to this article. It says Robinhood is done. They can't compete with service in any respect, and their only claim to fame was zero commission. So sure enough, this guy was thinking the same thing. I'm sure we're not the only people thinking that. But I don't know. I hope Robinhood pulls through. I do believe Robinhood has a great foundation, but they're going to have to offer something special to investors in order to draw people in now, because there's nothing super spectacular about them when a Charles Schwab, a TD Ameritrade offers all sorts of bonus features, if you will, on their websites that Robinhood doesn't offer. So, I mean, it's a very interesting time in terms of being an investor. It's great for the consumer or the investor, the everyday investor now, but maybe not so great for a company such as Robinhood. So it'll be very interesting to see what happens. I'm just going to keep this video real short, guys. So let me know what you guys think in the comment section below. What you guys think will happen to Robinhood. Again, do you guys like this move? I'm sure most of you guys do. I like this move. But again, I'm interested to see what happens to Robinhood. So go ahead and leave a comment. Also like and subscribe if you haven't already. And yeah, that'll do it for this one. I will catch you guys tomorrow. Happy trading.